All right, guys, today we have on Alex Thorn, who is head of research at Galaxy Digital, somebody who, in my opinion, and I'm just thinking about this right before I say it, but I'm going to go ahead and say it, is probably one of the most well-versed across the board in this space. Having knowledge of just a host of topics, you're not really going to find anybody who's more on top of it than Alex. Also, a chiller, just a good guy who is fun to be around, fun to hang out with, has a good podcasting voice. I've been on his podcast before. He should have come on mine before and / should have been a more frequent guest, just because he is somebody that I often look to for sort of the current events, especially is in Washington a lot. Anyways, I don't need to give you any more of an intro. Alex, welcome. What do you do? So like obviously you run the Galaxy Digital podcast, which I listen to. But like what is most of your work at Galaxy?
Yeah, Gwart, thank you so much for having me finally on the show. I'm just kidding.
I know, right?
Big fan of your work and the Gwart show, but also your commentary on X is among the funniest and most insightful satirical posts. So recommend people follow Gwart. And thanks for those kind words. So I'm head of research at Galaxy. We're one of the biggest trading firms in the world for crypto assets. We're also an asset manager, an investment bank, a variety of things, right? All types of trading on behalf of counterparties and clients, lending, electronics, spot, derivatives, et cetera. My team produces a voluminous amount of content about crypto markets, technology adoption. We build data products. We inform our internal strategy, but also publish publicly. We have written reports, newsletters, podcasts, et cetera. So shout out to Galaxy Research. You can follow people at galaxy.com/research or GLXY Research to follow our stuff.
Yeah. Go ahead.
No, just happy to be here. I mean, I think we like everything from I would say at the core for our content and our job, it's trying to translate the complexities of and nuances of crypto and blockchain technologies and crypto markets from a crypto native standpoint into something that can be digested by institutional investors. So portfolio managers, active traders, liquid hedge fund traders and PMs, right? In particular, although also, investors generally, but
yeah, so we're going to hop around a bunch, and so it's not really going to be so chronological, but maybe I can just start with like, we were talking before and you said that you've been in Washington a lot recently. So maybe we could go and we could start there. Like, I guess maybe what do you spend most of your time on as of late? But then, if you want to parlay that kind of into just Washington regulation, Clarity Act, like there's plenty of interesting stuff there that I know you follow closely.
Sure. I mean, look, the saga of crypto is long and ongoing, right? And, exactly. A month is a year in real people's timelines. And so I would say what we're following, a lot of things, obviously, but broadly, like if we think of the state of this market, right? You had a all-time high over 125K in BTC in October. Then you have that deleveraging event, the ADL related event on October 10th. And of course, we've been in some form, however you want to describe it, of a bear market since. And so, tracking, understanding what that means, its impact on trading this market, being long or short, or how it's affecting, secondary pockets of the market like venture or DeFi is a big part of what we've been doing the last 6 months, right? Like in plain terms, but there's much more to it than this. And even the main thing I don't love to do, but like bottom calling. When have we bottomed? When should we be buying? When will the market come back? All of those questions, I would say that's sort of the backdrop and context for all the work we've been doing since then. And that's always the case. And that's when I say it's a long saga. Like, I mean, we've been through this. I've been at Galaxy for 5 years and I was at Fidelity for 12 years before that. But like, even in the 5 years I've been at Galaxy, we've gone through this story maybe 3 times at this point, big run up, bear market, big run up, bear market. So that does color, I think, the sort of the tone and focus of our content, obviously, in our research. Obviously, there's individual market-driven or event-driven things that we write about. And then there's also a collision between that backdrop, the event-driven stuff and our long-term theses, broadly speaking, some of which, think about the adoption of Bitcoin or the interplay of TradFi and DeFi or the, competition / nuances of L1s versus L2s or scaling blockchains or these longer term, bigger ideas. One of the things I've been working on a lot, and I mostly on our team cover policy and Bitcoin in particular. And as part of that, one of the things I've been working on a lot for really the last, 3 years, but a lot this year, is, legislation and regulation of digital assets. So right now, obviously the main event is the Clarity Act, comprehensive market structure regulation, and the debates and negotiation around the various issues involved in Clarity, right? With stablecoin rewards having taken most of the headlines and certainly being sort of the front and center impediment or negotiation that has to resolve before the bill can become law. But there are other important issues as well that I think are percolating beneath the surface and not quite understood. Things like dev protections, the BRCA, Title III, Section 505, which is the handling of token, in the bill currently, effectively a limitation on the SEC's exemptive authority to allow for tokenization of stocks. So there are these other quorum, which is like the fact that the SEC currently has 3 Republican appointed commissioners and no Democrats. The CFTC has no commissioners other than the chairman. And, ethics, government ethics, should we prohibit elected officials or their families, et cetera, from, these are other issues that aren't talked about nearly as much, but are also at issue. And, I was in DC, at the 3rd week of April, which as we record was last week. And, again, I'm meeting with members, bipartisan members in the House and Senate, with regulatory agencies, with the Treasury Department, et cetera. Again, advocating our view of how this should happen or pressing both allies or opponents to agree with our position and move this bill along, et cetera. So we're actively working directly in advocating for the passage of Clarity, but also, advising and helping provide technical assistance on the bill's language, on regulatory questions, et cetera.
So, okay, what is your current read on Clarity? I had Jake Chervinsky on, I think, I'm trying to think if it was 1 or 2 weeks ago. Anyways, this is ever changing, and the odds of its passing, to the extent that you think that prediction markets are a viable source of truth, are in constant flux. It was up to 60% or so, and now it looks like we're hovering just shy of 40%. It seems so. I'm curious. The stablecoin rewards thing was sort of front and center there for a second, especially given Coinbase's fairly rigid stance, or they're taking fairly hardline stance on this. But I don't know if this is the current hold up or if this is still the current sort of Schelling point or whatever you want to call it. What is your view on Clarity in its, again, this is April 23rd. What's going on with Clarity? Why hasn't it passed, or will it never pass?
Yeah, I put the odds, I think, at around 50-50 at this point that it will pass this year. So a coin toss that is up. I mean, I've been on the more pessimistic side, I think, in the past. 50-50 is pretty good odds for any complicated legislation, in my view. But there's the market and the consensus, the conventional wisdom is that stablecoin rewards, quote unquote, is the main blocker and hurdle, and that if that clears, then should be smooth sailing. I think that's what most people think. I think that's wrong. I think it is obviously the sort of main current holdup, right? Whether or not a stablecoin issuer or a third party could pay holders of a stablecoin, right? Said another way, can stablecoins under the Genius Act pay interest to holders? Right. And it's sort of the compromise that's been worked on and being worked on in the Senate Banking Committee is, as I understand it, currently a ban on directly paying rewards to a holder solely for holding the stablecoin.
Right, you have to do something
perhaps you could, you go to open a bank account, they give you a toaster historically, something like that, right? You open an account, maybe they can pay you some rewards. You transact in the stablecoin more than 2 or 3 times a month, maybe they can pay you some rewards. But again, activity-based rewards as opposed to sole, passive interest bearing. I don't know if if that compromise is what's put forth. It's not quite clear to me that it's good enough for crypto or for the banks. It's actually the same sort of contours of the compromise on this issue that was likely going to take effect in January that Coinbase expressly opposed, right? So maybe Coinbase in particular, but all, the sort of stablecoin wing of the crypto party, maybe they've moved and they're now okay with that. It's not clear that that's enough for the banks to get them to stop opposing. So that one is a live issue, and that's sort of the one that's in the driver's seat on timing. Senator Tom Tillis from North Carolina is sort of leading this negotiation. And just on Monday of this week, like on April 20th, he posted, or maybe it was Tuesday, he basically told Senate banking to delay markup further because that issue isn't resolved yet. And I think part of the problem here is, this is a very good bill in my view overall, like generally speaking. It's a great bill. It's got a bunch of stuff that is both good for investor protection and for promoting innovation. And it's likely you have a pretty opportunistic window here to pass it.
Right.
And that window is closing rapidly. If the balance of power in the House or Senate change in the midterms, then the whole calculus here changes. Doesn't mean it's dead, but 70 Democrats voted last year in the House for the House version of Clarity. So there is decent support across the aisle for crypto legislation that's the industry would like. But again, as with any major bill, like the balance of power dramatically affects it. So, and the thing is like Senate floor time is very scarce. People don't know how the Senate works really. I wouldn't blame them because it's like one of the most arcane and obscure institutions in the history of the world. But like, suffice to say, like, there's not a lot of time on their calendar, and they all go on recess in August. And when they come back, there's like a month and a half of Congress leading into the midterms. And historically, nothing serious usually gets done in Congress during that month and a half. So you're now looking at basically between now and August is literally the amount of time that's available. But there are other things competing for that time. In the Senate, possibly something about the Iran war, maybe some budget reconciliation work, a giant backlist of nominations to federal office that the Senate has to consider. And so the bill can't get to the floor until the Senate Banking Committee does its markup. And so you've got these steps. They've got to announce the markup. They've got to hold the markup. Then it has to go to the floor. And the floor alone, it could be a whole week of floor time is required just to like move the bill. And that's, of course, even if it can pass, and it needs 60 votes ultimately to defeat cloture in the Senate and pass. So now you probably lose one or two Republicans. So you need 7 or 8 Democrats. And that is the dynamic that both on terms of balance of power and timing that is driving the urgency for clarity. There are other issues beyond stablecoin rewards. So one of the reasons I really caution people, if you see a headline that says something like, banks and crypto agree on compromise in principle, I think Senator Tillis and Senator Alsobrooks, a Democrat also on the Senate Banking Committee, they had said a couple of weeks ago that they'd reached an agreement in principle on this issue. But like, that doesn't mean it's going to pass. Like, there's other tricky and sticky issues that even if they don't come up in the markup, will almost certainly come up on the Senate floor. So, but I mean, I could go on and on about this. We think it's a very important bill. Crypto doesn't quite need it, I think, as much as some people have made it seem. We're pretty good for the next 2.5, 3 years with the administrative relief and interpretive guidance that we're getting from the agencies. But, codifying some of that guidance and other things into federal statute, 3 years is one thing. We'd like 3 decades, right? Like most of the current U.S. capital markets is built upon a legislative framework from 1933 and 1934, which, I could make a joke about that was a long time ago. Surely it needs to be updated. True. But also like, the 33 Act and the 34 Act codified U.S. capital markets for decades, right? And that's why we want it in federal statute. One, to prevent the rollback of a future administration that is hostile, but also two, to literally build like that last final leg of integration and maturity into the capital markets.
Yeah, I was talking with, Jake a couple of weeks ago, and he, it seemed like maybe not a huge factor one way or another, but he was mentioning the, Democrats seem to want something in there, or at least acknowledgement of the Trump family. I mean, I don't know if they was named specifically. I'm sure the Democrats named specifically, but maybe in the bill, it's perhaps more just politicians in general being able to engage, profit, launch tokens. How big is that? Is it like a big factor when you talk to people, or is that, I mean, like when you're talking to Democrat, representatives, for example, like, is that something they point to? It seems like a very valid thing to point to, especially given how a lot of this is played out, right?
Yeah, I think that issue, which we call the ethics issue, that's ethics.
Yeah.
And also, I would say, recent negative headlines and actual things in DeFi both are bad. They work against us on the bill, right? They're good. They're great narratives for opponents of the bill and for critics of crypto. And rightly so, right? I'm not saying they're wrong to raise them. So on ethics, I think, yes, obviously the Trump family and their activities in the crypto industry are an impetus for people to raise the ethics issue. I do think, and that's tricky, right? Like politically speaking, because like the president is unlikely to sign something that includes like strict prohibitions, right? I think, and that issue isn't really one for the banking committee. I think it's very doubtful that in a markup that this issue will materially, come up in the text. I do think probably some anti-crypto members of the banking committee may raise it during the markup, but really this is a floor issue. Like this is something that like could muck up the bill, even if the banking committee version gets negotiated and agreed upon, it could muck it up on the floor, right? One thing I think that's positive is from talking to members and people working on this issue, it does seem that those who are advocating for stricter ethics rules relating to crypto have moved a bit to a more moderate position. I think part of the reason of that is that it's unconstitutional.
They want to launch coins in the future.
Well, I think you're definitely going to get some prohibition on administration officials themselves, some formal, although government ethics rules already kind of prohibit you from doing stuff like this at the moment. If you're like a working official, if the thing is if you're, a constitutional official like the president or the vice president, or their families, I think it's understood now that it's basically unconstitutional to prohibit the adult children of a elected official to do something that's otherwise legal. That wouldn't survive. It's not really worth having the fight over that version of an ethics thing because it definitely would not survive the courts. I mean, to be clear, like you can't, Gord, if you become president, like they can't pass a law saying your kid can't own an airplane or whatever. It's ridiculous. Like it would not survive the judicial process.
Well, I also just assumed that I have no source for this, but I just assumed that Trump specifically was insulated enough through shell companies and all, now I don't know about promoting it though. He did tweet about it, right?
Yeah. So, and they host conferences. Yeah.
Right. But I always just assumed there was he's spoken to some lawyers, and regardless, pardon himself. I'm being, you know what I mean?
I think the Democrats and or anyone else who cares about this issue, they're just simply not going to succeed in explicitly passing a Trump specific type of ethics prohibition. It's not going to pass. It may not be legal. Even if it did pass, so it might be overturned. But I do think it's very likely something related to this has to go in the bill, right? Like I think it's going to be tough for Democrats to vote for it, even those that are generally supportive of the crypto markets or industry, if there's not something here, right? And so I don't know. We'll see. I don't know where that's going to land, but I have been a little bit encouraged again for the prospects of the bill. I'm not advocating one way or another on that issue really, but thinking that it could be a roadblock, then of course I'd like to see it resolved so that the thing can pass. And I have been a little bit encouraged, some movement on the stricter side of the argument, to acknowledge that whatever is done has to actually even be possible. And I think that makes it, I'm not that concerned about the issue holding up clarity, but something will happen. I almost certainly.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. Ellipsis Labs brought capital-efficient order books to Solana and started the Prop AMM revolution with SolFi. Altogether, they've saved retail traders tens of millions of dollars by reducing slippage on spot markets. They're bringing the same level of expertise to perpetuals with Phoenix, which is live today. Ellipsis Labs is backed by Paradigm, Electric Capital, and Han Ventures. I would consider them the foremost experts in crypto market microstructure. The best part is that Ellipsis Labs is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer looking to work with a DeFi team that's already proven itself in the market, go to ellipsislabs.com. deleverage.com/careers.
Okay.
Do you sense any remorse amongst powerful actors in crypto, or regret maybe supporting Trump given how this has played out? And I think it's a very like sort of complicated question because, right, we are getting like, we had the genius, like there's like good, well, seemingly more engagement with the CFTC, with the SEC. Like there are good things that are happening, and there seem to be some increase in perhaps the freedoms allowed. Like if we want to look at this from kind of like civil liberties or whatever, like there seems to be positive developments. With that said, in the short term, right, like the fallout from all of the different little schemes that Trump and co have engaged in, like I sit there and I wonder, like, what is Brian Armstrong thinking? You know what I mean? Like you have to assume that he's having some like deep kind of like conflicted views. Like, oof, like I don't know about this, right? So I don't know. Do you respond to that however you want? Maybe I can just be the one to say something, and then you can deflect however.
Yeah, I mean, look, I think and I believe this quite strongly, and I think most agree with this that are in crypto, unequivocally positive, the Trump administration for crypto assets and the crypto markets. I think regardless of how you view, the Trump family's interactions with the crypto industry, the threat of a Bharat Ramamurti, senior advisor to Kamala Harris, if she were to become president, was existential for crypto. So, look, everything, you don't get to control everything, but I think, Paul Atkins at the SEC, Jonathan Gould at the OCC, Scott Besson, Tyler Williams at Treasury. These are just orders of magnitude better than the prior administration's people on this topic, and who we would have likely gotten had Kamala Harris won the presidency. Yeah. So again, on this issue, crypto rules and regs, I think the Trump administration gets a very high mark in my view. So, how people are reconciling that with either their views on the Trump family or other issues that the presidency has resulted in, economic, geopolitical, whatever, like that's each person's own decision. But I think as a pure, narrow matter of crypto policy, the Trump administration's been excellent. And, that's my job, is to worry about just that specific thing. So I'm going to leave it there.
That's good. Okay. All right. Let's just talk about the market in general. I mean, where are we? Seemingly, and maybe the come out of a bear, I'm hoping, but what are your thoughts?
I mean, it's hard, bottom calling is not a good profession to be in, I think, but especially in something as volatile as Bitcoin and crypto. But it does look here, as we talk, we're trading at like 78K in BTC. That's materially safer and better looking than 60K. Sure. So, but it's been a pretty slow grind since February 5th when we hit like 58.5. Like we're not up that much from there, but it feels like at least you've got some padding. I think, is it a new technical regime, or is it just the high end of effectively the range we've been in? Right. I tend to lean towards the latter, that like, until we cross like 85, 90, it doesn't really feel like we're for sure back. Like 78 could be 70 pretty quickly, and then that could be 62. Like it's not that crazy, right? Right. So it doesn't feel to me like we're definitively back, but it does. Obviously, Bitcoin's trading well over the last couple of weeks. So have other risk assets. So I think there's that. I would say like if it was the bottom February 5th, where we were at 58.5K briefly, or so, somewhere in that range, 60K, you'll look back and say that could have been the bottom. Like that would have made sense for a bottom. It was, if you remember that, I mean, we dropped from 75 to 60 in like 2 days. There was a lot of capitulation vibes, tons of liquidations, right? That did feel like maybe the panic wick that historically could be the bottom. But obviously that doesn't change the other myriad factors over the next, coming months. There's so much macro and geopolitical uncertainty that, who knows exactly what could happen. So I guess what I would say from the market standpoint is, Bitcoin's trading well, but has a ways to go before it feels like we're really back into our uptrend. If that was the bottom, then you're looking at a pretty long-term bullish setup here where, the bottom was 15.5 after FTX at the end of 22. And now if we bottom at 59, like, wow, like that's a much healthier, like we're growing, right? And so, higher lows, right? So I think if it does go lower, basically every time the 50 day moving average has been broken during a bull market, we've reverted to the 200 week ultimately. And that's at 59K right now ish, the 200 week moving average. We've gone lower than that in prior bears, but not much lower. And it usually, if you draw that line on the chart, you'll see it's pretty strong long-term bullish support. So could we go back down there or slightly? You could. It wouldn't be unheard of at all. This could be a bear market rally, that's possible. But I think generally speaking, like the stars are pretty well aligned for Bitcoin to do well sooner than I think people think. Maybe not, in weeks, but, the end of this year, you could see it higher. But again, like, I think about it, people didn't really sell that much. You always have old G whale selling into uptrends. That's literally how Bitcoin distribution occurs. That's how any asset occurs. But ETF holders pretty resilient, like policy backdrop strong and improving. Every bank and brokerage on earth is offering Bitcoin related stuff and crypto asset services and whatnot. Like all of that is so supportive. And, even if you have like a change in the balance of power in Congress, you still have a supportive executive branch for the next 3 years, right? Like there's other geopolitical reasons that I'm bullish on Bitcoin, the multipolar world and the fracturing of the global status quo in both geopolitical and economic and monetary terms is, I think, supportive for a non-sovereign digital asset like Bitcoin. So I think there's plenty of good reasons for it to, trade well in the near term. But okay, given that we've been in this thing, I think there's been a lot of interesting developments in the L1 landscape, L1, L2's application layer like DeFi, how people are thinking about and using Bitcoin and Ethereum and Solana. And it has been an interesting time that, sometimes these, depending on what the issue and discussion is or aspect you want to talk about, like sometimes these come more to the forefront during the bear than they do during the bull. People tend to paper over, outstanding questions or incongruencies, like when everything's ripping, like people just sort of like, don't worry about them. And then we get all deep in the nuance and competition and stuff during the bear. And so there's been some of that too. I think that's been quite interesting.
Were you surprised at all that Bitcoin, well, I guess this is maybe a two-part or multi-part question. Were you surprised at all that Bitcoin topped at 125? Maybe in addition to that we came all the way back down to 60, and that the final part being this does align roughly with the 4-year cycle again. I'm sure you got this question a million times. I guess the one thing that I didn't have personally very strong, I'm not a trader, so I don't really have strong views one way or another about like timing cycles and stuff. I was a little surprised that we went down 50%. I was like, I just thought that the ETFs weren't really selling. You still had, Michael Saylor hadn't blown up yet, and all of these things are just supply sinks, right? And so I just look at it in very simplistic terms. Like, I just did not like. If you'd asked me at 125, first of all, I don't think I would have said that's the top. And then I also would have thought that much below like 80K, I would have been like, that would surprise me, right? Like at this juncture, the chasm seemed to have been crossed. Now, I will slightly qualify that by saying that Bitcoin is still, 1/30th the size of gold. So like maybe I was naive in thinking that we had crossed this chasm, right? We sit here and, exalt about this, currency that we've created out of thin air that's going to usurp gold, and really like we're still so far away. And I think we get very detached from the actual dollar amounts, because Bitcoin is the king within the crypto landscape, and in the real world, right? There's 35 trillion worth of gold. There's hundreds of trillions worth of debt, real estate. There, what I mean? They sell we in this context. But I'm curious about those, like the 125 top, the drawdown, and then like the 4-year cycle basically holding roughly true, assuming that we are indeed, like in a, if you look at where we are now.
Yeah, it did roughly occur. And I totally agree with you. And not that anyone should bother themselves with this, but if you go back and watch my stuff over this time period, like I was basically saying, among other things, that I thought was unlikely, and I'd be very surprised if we went below 100 during that drawdown in the fall.
That's how I felt.
I mean, we were thoughtful about the way we said that. I mean, it clearly can go below, but we were like, that'll be a big test if it does go below, like, kind of looking at abyss below there. And of course, that's what happened. I mean, I was surprised. I was. Now looking back, am I surprised? No, to your point, it looks a lot like prior cycles. Some things that it doesn't look like, right? Some reasons why it doesn't look like prior cycles. One, fundamentally speaking, maybe the shape of the price looks similar to prior cycles, which I think is fair. And it's true. It does. I mean, empirically it does. You didn't have these sinks like the ETFs and MicroStrategies and possibly some institutional allocators and or even sovereigns like that you do today in the prior ones. So that's a reason perhaps why minus 50% might be the bear rather than minus 70 to 90% like all the other prior bears. I think there's some truth to that, or likelihood that, we don't bottom in the same way or as with the magnitude. Similarly though, like, yes, your other question was like, was I surprised 125 is the top? Absolutely. The same way, one of the big on-chain, I know James Check says this, and a lot of people feel like 21's top was also too low, that we kind of like, just didn't 69K, like you didn't get to where you needed to be. And I think there's some truth to that about 125. Like, you're literally telling me you've got the president and all, most major cabinet officials all love and own Bitcoin or did own it, right? Like, you've got the most accommodative regulatory posture towards digital assets in the history of Bitcoin. You've got, it couldn't have been a better setup. You've got the world's largest asset manager literally explaining why Bitcoin is awesome on a daily basis. And yet we still only 2x the prior all-time high. I mean, I think it needs to go much higher. It's why we're bullish. I think your point about, gold is a great point. Digital gold. I think one of the things that although Bitcoin ran like 7x while gold did a 2x since 23, like nonetheless, like gold and Bitcoin rallied most of last year, and then they diverged substantially, right? Gold it's come down a little bit from where it was, but kept going higher in the fall, and Bitcoin was going lower. And I think a lot of people on Wall Street are like, professional markets people, traders, RAs, whatever, who also like to look at the Bitcoin chart. They were, I don't want to say disappointed. They were flagging this. Oh, I thought it was digital gold. Why isn't it trading like gold? This divergence is negative for Bitcoin's narrative. And, that's true that it did diverge. And I can see how some people would say that was negative for the narrative. But of course, Bitcoin, to your point, is 1/30th, I think 3.5% of gold's market cap ish today. It's not the same asset. And also
it's like 3,000 years younger. I mean, like the thing that, it's really like a maturity test. I think it was some degree, it was a little bit humbling for a lot of people who were convinced that it had taken that digital gold route, and kind of gold comes in and there's a lot of macro uncertainty and a lot of, geopolitical unrest. And it's like, no, daddy gold is still daddy gold.
Yeah.
And like, it's a lesson, but it's like a maturity thing. It's 15 years old. Like
that's right.
It doesn't bother me. Right. But I can understand there's a little bit of like the shifts taking victory laps, which it's in the long run, I think
understanding of the digital gold thesis a little bit. Like, now, don't get me wrong, some people have made the thesis into that it should trade as a high beta to gold. Like, that's never, I think, what we said or meant.
I never
said or meant, but I mean, even like, Bitcoin people, like, that idea emanates from Satoshi's own post where he says, do a thought experiment. If there was a odorless, colorless gold-like material, but it had these additional features, would that be valuable? Right. That's sort of where it comes from. And it is a reason why it's those features, Bitcoin's non-sovereign, scarce, peer-to-peer, permissionless nature, censorship-resistant nature, does make it genuinely at a fundamental level look similar to gold. And so the delta between those fundamental features and whether it trades like gold exists, but that delta is also your alpha, right? Like, if you believe that it will ultimately be used more as a digital version of something like gold, then the fact that it isn't there yet is why there's upside, right? Like the thesis, it remains intact. I guess the question is, when will it actually trade more like gold? Like, that's more of an adoption and, like you said, maturity question. And I think, frankly, like it's not far from doing that, right? I think, you could say, well, it diverged in October and, it's been down while gold has been flat or up. Like, sure, you can empirically see that. But like, it only takes, one or two major allocators or a central bank or a sovereign to say, you know what? Because of the debasement of fiat currency, we're going to start holding Bitcoin like we hold gold. One or two of those dominoes fall, and like the masses will come to that trade and trade it like gold. And so, on the one hand, there's like almost a binary. It's a thin line between trading it like risk or trading it like a hedge. And I'm arguing that it doesn't take much to cross that line. On the other hand, it's been crossing that line successfully for 15 years. So maybe it is just waiting more time and that maturity question.
I think that also a lot of it, at least from where I get my information or what I follow, you're more keyed into the institutional side. I get a lot of what I think about from crypto there. And the reality is that if you zoom way out, like you said, it bottomed at 14.5 and it went to 125K over the course of just roughly over 2 years. That's a 10X. That's a remarkable return. A lot of crypto did not follow suit. So there was this, it kind of got extrapolated to some extent to Bitcoin as a whole, which was that, this bull market had terrible returns. And it's like, well, actually, I mean, of course, I didn't bottom ticket. I didn't buy or sell
but I mean,
at 14.5. But
it moved
if you look
7
at
to
that,
10x.
you zoom out. Exactly. It's like, wow, that's a massive return. But what happened was that a lot of coins did not do that. And so then, and a lot of people didn't own coin, relative, or there were a lot of people, primarily trying to bottom tick coin.
Yeah, a lot of people have never owned a single Bitcoin, but they have heavy bags of hex or
exactly.
I mean, look,
any of them really.
First of all, it's definitely true. Like most assets didn't do well. I mean, ETH made a new all-time high for like 5 seconds, right? It's still so meanwhile,
Sol
Bitcoin
made an all-time high for 5 seconds.
Yeah. Meanwhile, Bitcoin achieved basically double its prior all-time high. So, I think there's definitely an aspect of that across the crypto, ecosystem. Very few assets performed like Bitcoin this time, whereas prior bull markets were characterized, in addition to other things, by a long tail of lower cap assets going up a lot. Yeah. That didn't happen. And that, look, a lot of crypto Twitter, frankly, a lot of the liquid crypto hedge funds, they didn't own Bitcoin. Makes sense if you're a portfolio manager. I mean, what's your case to your LPs? Like, we're actually just owning Bitcoin. Why don't you just do that directly? So you've got to, I mean, you're trying to sell alpha to your investors. So they have to go out on the spectrum a little more, but very few of them outperform Bitcoin. Right. And, this is probably a longer term trend. I think we've now gone through this cycle enough that, think about 2017, people are raising hundreds of millions of dollars to build the Bloomberg of digital assets, or, a decentralized Uber, or like all these very, esoteric or fantastical, innovative is a nice way of saying it, ideas. Then they did it again in 20 and 21, and then maybe tried again in 24, 25 with meme coins. And it's like, how many times can this happen and not outperform Bitcoin? It's now been every time, but many times.
Yeah. Well, it's really it's like the euthanasia roller coaster. And I think that what's happened, I mean, obviously you can just look at you can zoom out and actually.
I just don't think I've ever heard anyone say the phrase out loud, euthanasia roller coaster. I know what you're referring to, but
but you can look, I mean, the thing is that you should be compensated. This is a very simple concept here, which is that if you're going to hold alts, if you are going to take that risk, you need to be compensated. And what is slowly happening is it's less so that these things can't run. Anything can run. There can always be a meme coin that goes 100x. It's more just this gradual acknowledgement that you're not being compensated. And I mean, we can even sort of extend this into DeFi, which we're seeing a lot of people realizing right now. I mean, not to sound so pressing, but I don't know why people didn't realize this 5 years ago. I was like, oh yeah, you should not be yield farming after. This is I mean, I wasn't right in the midst of DeFi summer, but where I was pretty active was in like a lot of the alt ones, like Solana, Avalanche, like Phantom, if anybody remembers that godforsaken thing. Like all there was a lot of farms, and after APYs dropped below like 1,000%, the risk reward is not there.
Yeah.
Because the risk of ruin is extremely high. And we see this consistently. But the same rationale applies to just altcoins in general now, where it's like, if you are going to invest in rounds, first of all, these are priced astronomically in private rounds. But if you're investing at 300 million, at 500 million, at $1 billion, like those things need to be able to run to 20, $30 billion. Avalanche almost ran to $100 billion. People don't recall this. Avalanche was its FDV was like,
that's crazy. I don't really recall that, but I believe you. That's insane. Crazy.
And that return's not there anymore. So it's less to me like whether or not you can spot a runner. Like runners will be around. It's, are you being compensated for taking this? And I think like that to me is like very evident that there's some acknowledgement now, but I don't know. Do you feel similarly like from
I do. And I think you're spot on. It's not just in like, tokens, but also in things like DeFi, which we should talk more about DeFi. But I mean, look, the returns have diminished. I mean, look, Bitcoin's returns cycle over cycle have diminished each cycle as well, right? But it's still it is doing its thing, whereas many of them didn't even do the thing at all last time. I think, I mean, like you think about like a low cap or a new blockchain token or a low cap altcoin, like they're so risky as an investment that your point is totally right. And they haven't been delivering the returns that they did in 17 and 20, right? At all, or like during those cycles. And similarly, like, DeFi, I mean, I was covering, I was working at Fidelity at the time, but I followed DeFi summer closely in 2020, partly because it was also like during COVID, it was a great fun time. We're all had to stay at home anyway. Yam finance and Sushi Swap, vampire attacking Uniswap. Like these were some very fun, all the vegetable meme based finance apps. Like that was fun. And I think that started off the back of Compound sort of innovating the first yield farm basically by offering its token as an incentive to use the app. And I mean, I think the risks, whether from price action or inaction, like from a price standpoint, or in the case of DeFi, smart contract risk, other types of risks, they're significant. And the industry is kind of converging on some simple winners and ideas, right? We know that people like non-sovereign scarce digital money. People just like Bitcoin. They want to own Bitcoin. That's great. Bitcoin has that. I don't think any other asset quite has that. Some people might say, well, ETH is pretty good. It pays a yield as well. Fine. But it's surely a much smaller cohort of people that think that about ETH than do about Bitcoin. There's categories of applications that I think have, resilience in the market, AMMs, like, although they're not the primary place where people trade, they're great for launching new assets. And, they're the best of them are truly decentralized. Lending on chain, lending apps, AAVE, et cetera, like have wide usage. Although, I think
let's
narrative damage here.
Yeah. So
beyond that, though, just real quick, beyond a small subset, like
right.
There's not, where we've kind of already done the exploration to decide which ones. And like now you've got prediction markets, I think, and perps, like, but again, you're talking about maybe like 3 to 7, just like resilient use cases that actually really matter, not 30,000. Right. So
obviously.
Yeah.
What you've been following the AAVE thing kind of, I think, the interesting part about it was, well, I don't know if you ever saw this, but there was this trope that people would say, which is just use AAVE. Like it was the distinguished category winner. It was the safest, most battle tested. This most recent KelpDAO thing, we don't have to go all into it. Obviously, there was a hack, and now in the most ironic way, I say that because we constantly love to cite the great financial crisis as how there was like mass contagion caused, and like now people have loved to talk about like there's been zero bailouts for DeFi, and now there's like all these demands for bailouts and how they're going to do the bailouts, and it was tranching and layering and our version of CDSs and CDOs, and it's like the whole thing is so remarkably similar. And it really does call into question the viability of this, not to mention the rates people were earning. Part of this, I'll just say this. Like, I do really wonder what people were doing accepting 2%, for stables on AAVE. There's the idea, okay, well, these people don't have access to T-bills. Okay, reasonable. I don't get it. But
there's a lot of looping, right? It wasn't just 2%.
Right. Yeah.
Loop it over and over again. But yes, I mean, so I still think AAVE is still that blue chip, and I agree it was, but I think it still is. Obviously it wasn't AAVE that was hacked. I think that, but AAVE also deserves some blame here, and I'll say why too. This restaked ETH. By the way, I was shocked to learn that there was a project using EigenLayer. No offense to EigenLayer, because restaking, I happen to think, is a phenomenally stupid idea, broadly speaking. And the idea that the additional juice you're squeezing out is from these AVSs, like basically other low cap altcoin blockchains. So that's a whole separate discussion. I think a relatively dumb idea overall. But where AAVE, and this will be one of the consequences, I think, many of that it will emanate from this saga and the Kelp DAO hack. AAVE raised the LTV of restaked ETH, RS ETH, just in January, right? Not only didn't lower it, allowed you to borrow more off it, right? Which I think is a governance failure, first of all, by AAVE. But if you've been following AAVE in general, as I do, because it is very important. It's probably the most important DeFi app. If we had to pick one, maybe there's a handful that are up there, but they've been having a very public and contentious governance dispute as well between the labs and the DAO. So probably that dispute or their general difficulties in governing this large revenue generating on-chain application probably contributed also to the failure to properly monitor and size the credit risk of some of the types of collateral that they allowed in their pools, RSETH being one. I think, for example, you will likely see AAVE and other lending apps narrow the number of assets they allow as collateral, reduce the types of derivative assets like RSETH, maybe, or remove them entirely. You'll see them.
Yeah, but this happened with Curve. I get decreasingly sympathetic because there's no there's no lessons learned. There's always a new exotic form of collateral, new exotic primitive, and we saw what happened. I mean, one guy who created the token borrowed a very large amount of dollars against the token he created. And what he did was he bought real estate in Australia, but at a more functional level, what he did was risk the entire collateral and lending system of this application. That was one of those, I've had a number of sort of moments where it's quite elucidating, and over the course of crypto, I've had a number of these, and that was one of them. And honestly, I'd kind of not written off, but just nothing could really surprise me thereafter with regards to lending. I'm oh yeah, I'm sure there was some stuff with Gauntlet, Morpho. I don't want to blame Gauntlet. Actually, I don't know. It was the Morpho vaults, all of these things blow up, and I'm yeah, of course they're gonna blow
I think
up.
Your lessons learned point is a good one, and it's probably a reality of the fact that this is open permissionless platforms. And so you remember when it was when FTX happened, there's a congressman from California, Brad Sherman, a Democrat, who's probably, I think he's my favorite anti-crypto politician, in that he's quite hilarious, has hilarious rants against crypto. And I think if I recall, I'm going to paraphrase because I don't remember the exact quote, but it was something like, shouldn't we just pause crypto until we can figure out what the hell's going on? And I just thought it was so funny, and obviously one of the more uninformed boomerish things to say about crypto, because of course you can't pause it. And, you wish that these teams would learn the lessons of the prior, and in the case of accepting endogenous collateral or whatever, right? Any of these various lessons that we appear to constantly have to relearn, right? Or I get asked by sometimes people in Washington, why won't crypto do this? And I'm well, why don't we call crypto on the phone? Who are you talking about, right?
Yeah.
Unfortunately, anyone can build anything. And if people start using it, then it becomes important, right? And you're right. I mean, we've speed run the entire history of financial markets, over and unfortunately appear to keep speed running it on a loop. I think I would say that if we wanted to be more specific, technically, we've improved over this period. I know it sometimes feels like we haven't, but
they're all fiat games. I'm sorry.
There are a lot of fiat games.
No. It's all fiat games. It's all predicated on juicing like yield and obscure like layering on yield.
Someone had that great post that was like the Dave Ramsey show where it was like from
exactly.
Like, so let me understand this. You staking wasn't enough. You had to also get it and use it again, and then that wasn't enough, and you had to deposit. Then you had to loop it, like just all for a couple percent. I have to say, following crypto, because I'm not like this in my investing, I am continuously shocked at the lengths people will go to juice a couple percent on a supposedly market neutral type of trade. Like the lengths that people are going to get like an extra 1 or 2% is astonishing to me. And they never seem to stop. That is the fiat game I see playing out so much. And it frankly surprises me. Like, I mean, I don't know. Like to me, I'm more of a long buy and hold kind of guy on things.
Yeah, but you're a Bitcoiner. You're a Bitcoiner. But I wonder, like, this is something that I do think about, and it's like there's this rationale that we're all in this together, in some capacity. And I'm very sympathetic to Bitcoiners. Like what I follow crypto a lot more closely. And so like I troll about a lot of this stuff, and I'm also just kind of, more interested in what schemes people are cooking up. But I am sympathetic to actually, like, you're doing exactly what we are trying to get away from. And you have been doing this, and it's been so consistent. Yeah. So we talk about lessons learned, and it gets jading when you're told, oh, like we're all in this together. Like we want to see crypto and blockchains do well together. I'm like, I honestly don't really want to see retail restaking something 8 times in order to beat the rate of inflation. Like that is precisely what I don't want. And so like, I don't know the degree to which we're in this together. Like I don't know that I align with that at all. And I don't know that I share that vision. And if that's going to keep being the vision, it alienates you, right? Like it does. And I wonder how you see, I can say whatever. You have to have like, you're actually work for a legitimate institution and have to be more measured with how you look at this stuff. But I don't know how you do it.
Yeah. I mean, look, first of all, like you, I'm entertained by the market. I mean, at my core, the reason I'm a researcher. Yeah. I mean, at my core, the reason I'm a researcher and say not a professional investor in the space is because I love following it. I love the storylines. I love the technology. You're right. I mean, we constantly get hit with these, failures to live up to Satoshi's dream. Obviously, like there's so much in crypto that is about fiat, short-term thinking, short-term gains, like hyper risk. I think we're not as an industry broadly marketing a bunch of like fake ICOs to retail at the moment. So like that's what I'm saying. I think there has been material improvements. Doesn't mean that the game has changed for everybody. There's still plenty of extractive behavior and manipulative behavior. It's one reason I hope that we get the Clarity Act, is I think that will empower regulators to actually crack down better on some of this rather than pushing it offshore or whatever else. The ignorance to the crypto markets by the market regulators historically has, I think, compounded the extractiveness and spams and failures and scams. But the other point I would make too, Gwart, is that for why people play these fiat games constantly or meme coins and stuff, there is a global malaise among the youth about the state of markets and the economy, a sensation, I think, among many young people that their lives won't be better than their parents, that, decades of crony capitalism and wealth inequality have, taught a lot of young people to play fiat games, gamble. They'd rather gamble their money than put in the hard work to build something and also learn about the savings technology that is Bitcoin. And that's why you see so much of retail crypto Twitter having ignored Bitcoin, frankly, like having not it's not widely owned, frankly. I know a lot of people who never even bought it, especially newer entrants, right? And they feel like, oh, I missed it. But, Bitcoiners, I think, would largely sympathize with your view and also would say this, that you really, you follow the Bitcoin world too. A lot of those people are just doing normal jobs and stacking Bitcoin. They're saving in Bitcoin. They're not playing games to like juice a return or hoping for 1,000x, right? Like the philosophy behind Bitcoin is not short-term thinking. It is extremely long-term thinking. But I think the youth of the world, in response to a number of things, and again, real things like the inability to afford a home, or genuine income and wealth inequality issues that are destabilizing economies and countries, and will continue to do so unless somehow those are resolved. That is leading people to gamble, right? Sports betting, meme coins. And I it is fundamentally at odds with the philosophy behind Bitcoin. I think I am able to, narrow in. I still think there are genuinely great things, not just about Bitcoin, but even about, public permissionless blockchains and DeFi that are worth fighting for. But, it's hard not to get jaded when you see the bad stuff happen over and over again.
The thing is, I kind of came in jaded. So, my entire persona has been one of being jaded, but I just am not I don't know. It's hard to grapple with.
I do think you're going to see, by the way, you saw Tether basically bailed out Drift. And I do think you're probably going to see the crypto community come together to unstick the DeFi that has become sort of frozen post AAVE. So there is a little bit of we're in it together, but I agree from a narrative and
but I was speaking more specifically with Bitcoin, and at least what we may envision Bitcoin doing. And maybe we're extremely naive for thinking so. I'm whenever people kind of, castigate me for being believing in some hard money, I'm yeah, that's fine. Maybe I'm an idiot. You know what I mean? I'm okay with that pushback. But so much of this stuff is just revolves around centralized stablecoins, which, as we saw today, Tether just froze $344 million of USDT.
I think their biggest freeze ever, and we don't know for what yet, right? I didn't see it. They didn't say why. They said in conjunction with law enforcement or something. But yeah,
it's just
this has been a fascinating debate. By the way, that debate, because there was the Drift hackers exfiltrated using Circle CCTP, which is their sort of centralized bridge, right? And then, Arbitrum DAO froze 70 million of the Kelp DAO hackers stuff through a governance vote.
Yeah, what do you make of that specifically? Because here's my thought.
It's a really interesting debate.
No, okay, I'll just tell you, the Arbitrum thing to me is, first of all, again, I followed this and I knew that this could happen. This does not surprise me at all. I quickly understood what was going on with rollups, and I was okay, they can freeze these funds. What I think is interesting, if you can stop North Korea, I think you should. I don't have any problem saying that. So that right there could be kind of case in point. That said, I don't hear people talking as much about, there's a little bit of this, but there's not a ton about the precedent that this sets. And when I see the precedent that this sets, I do wonder, are regulators looking at this and saying, oh, if there's a way to do this, every rollup needs to be able to do this. And we're not letting, regulated assets, we're not letting X stocks, we're not letting tokenized securities on ledgers where you can't stop it. And maybe that doesn't matter anyways, because the fact of the matter is those, centralized stablecoins can be frozen. But I don't know that I see a lot of people talking about whether or not they should have done it. I see a lot of Bitcoiners taking this very, hard.
They did it. See, I told you it was centralized.
Right. Which is, I'm if you can stop it, right? If you have that ability, but going forward, are regulators ever going to let Arbitrum not do that, or any rollups that have any type of liquidity or functionality going to be
slippery slope?
That?
I mean,
so I do wonder.
Yeah.
What do you think?
Yeah. I mean, no, it's a very legitimate and real tension, right? We'll use the both Drift and Kelp DAO as a recent example, right? Circle was criticized by ZachXBT for not freezing or for allowing 6 hours after Zach notified them, still allowing or not stopping. I don't know if they affirmatively allowed, but not stopping the use of CCTP to bridge the Drift hackers' money. Taylor Monahan has praised Arbitrum DAO for seizing the North Koreans' money.
Spicy. I gotta try to get her on. She's a spicy one.
She is great. She's an expert. So she's part of the SEAL 911 team that does all this sort of after action work on hacked funds. there's pretty good arguments on both sides, right? Like, I mean, I think her interaction with Gabe Shapiro is one of the funniest I think I've seen in years on Twitter.
I saw that.
I won't say it because it was explicit.
Yeah.
But this right? You said, Gabe Shapiro and others have, I think, raised a valid point. Take Circle as the example. Circle said, we freeze based on lawful court order. Like they don't really want to be in the position of setting up a kangaroo court inside their company that arbitrarily freezes funds, right? Because imagine, don't get me wrong, DPRK stolen funds would be probably top of the list that you should freeze. But let's say you and I do business, Gwart, and I go to the Circle and say that Gwart, failed to deliver on a contract. Please freeze his funds.
I sold you fake Nikes.
Yeah, exactly. And so there's a real tension there. But I agree. I mean, if you have the power to stop terrorists or rogue nations from stealing people's funds or conducting illicit activity, I think most people would agree you should use that power to stop it. I think, clarity. And so to your other question of like how regulators are and the government is thinking about this, they are thinking about it in clarity. There is a section, I think it's 305, that is, it grants what we call temporary hold authority to centralized issuers, such as stablecoin issuers, but probably also exchanges, where they can, they can voluntarily, if they suspect illicit activity, freeze assets for a period of time. And now, obviously, they have the technical capability, some of them already, to do that. But this section of clarity would actually provide a liability shield for them in the case that they do that. So Circle could now go ahead and do it and say, and be immune from lawsuits during that time, right? So, and there are similar authorities in traditional finance. I think that's one interesting answer to this. It removes some of the hesitation that a centralized issuer might have. Maybe not all the hesitation, but might have in doing this. Also related is there's a section in Title III. I forget again which section it is because there's many sections and that's a long bill. That's titled non-decentralized financial ledgers. So Title III largely provides clarification and, in the case of something is truly decentralized, exemption from certain types of registration regulatory burdens, which I think is warranted in the case that something really is decentralized. How would a truly decentralized autonomous code come in and register, say, with the SEC? Not possible. So it's very positive, Title III, broadly speaking. But it does say, by the way, if you are not a decentralized financial ledger, then these exemptions wouldn't apply to you. And of course, rightly so, I guess, be hard. It doesn't actually set an explicit threshold for what decentralized and non-decentralized is. The House version of Clarity did set a threshold in what we call the mature blockchain test, which, among other things, said that the founders can't own more than 20% of the tokens, right? But the Senate version doesn't have an explicit threshold test for when something is or isn't decentralized. But I think it's fair to say that even under Clarity, even Arbitrum's DAO, which, by the way, is pretty good decentralized multi-sig, I think it was 10 of 12. And, shout out to them because they also have very smart people on there as key signers for that. It's not just 4 dudes in, somewhere in a basement that are coded an app. They have pretty rigorous group there. But even in that case, I'm pretty sure Arbitrum would not qualify for some of these exemptions because they have that centralized power. So the bill and regulators' stances generally do contemplate this tension. And I think, look, for me, I think depending on the type of app, I personally am not in favor of any layer 1 or sort of platform level having these powers at all, frankly. But, an app level, maybe. And I agree that the fact that some do have it, opens the door for, say, laws or regulators to demand it. They're not currently demanding it in Clarity, but they did draw a distinction between those that are decentralized and those that are not. And frankly, I think it's a relatively strict distinction. You're going to have to be pretty dang decentralized to, I think, avoid, being labeled non-decentralized. So I think now, and that's good, by the way. I think that's good. I think it will encourage more developers, if that becomes law, to rethink the level of control they have over it. But again, like you said, seizing a North Korean's funds is probably, the hackers' funds, not just, a normal person in North Korea, but seizing stolen funds from a sovereign bad actor is probably a pretty good thing. And so maybe more people will want. I think you are going to see the especially as institutions get involved, if they want to use DeFi, the traditional banks and brokerages, they probably will gravitate towards something that has a bit more control and protections. I think one of the positives, you see like Canton and like the new class of what I used to call enterprise blockchains, permissioned blockchains. Yeah. I don't like that approach, but like Ethereum and Solana are composable enough as permissionless chains that you can build some permission stuff on top. So I'd rather, if we're going to have a class of permission stuff, have it be built on the permissionless open internet of finance rather than in an intranet, right? And I do think the industry, and including the TradFi builders, have moved more in that direction. Like, we can use open Ethereum, but we'll build our thing permissioned on it, right? I think is likely how that goes. But I don't know, it's a fascinating tension because I think there's decent arguments on both sides.
Yeah. Well, Alex, this has been fantastic. I'll have to bring you back on. We've already gone an hour, so we'll have to ramble some more sometime. I really appreciate it.
I don't know, people watching this or listening, are they seeing your face right now?
No.
Yeah. So, you haven't been able to get any of the incredibly spicy facial reactions that Gwart has made during my incredibly insightful comments. You've just been looking at his avatar this whole time. I can tell you, by the way, listeners, Gwart, and he looks exactly like his avatar.
That's what I hear.
Exactly like it.
All right, Alex. Well, I really appreciate it. It's been fantastic.
Yeah, thanks for having me, Gwart. Big fan of the show.